G'day everyone and welcome back to Pete's Investing. Today is March 30, 2023. This is the Bitcoin price update. On the three timelines, the daily, the 4 hourly and the hourly, you'll notice on the daily and the 4 hourly, our CCI 1500 is broken above its moving average. So that's a bullish indicator. And on the hourly, it's broken below the moving average. So some potential caution going long at this point. We'll drill into each of these and just discuss what's happening here. So since our last update here on this dotted line, you can see here it's bounced up from that area, and I'll show you that that's actually a support area on the 4 hour chart. I'll show that in a second. It's come up and actually bounced off that resistance line twice, so once back there or a couple of times back there, and then once again today. So again, you just be mindful of we've drawn these two, a diagonal descending line and a diagonal ascending line, and these support and resistance. So on the daily, we're looking at a bullish momentum at the moment. On the 4 hourly, there is this confirmed support level formed. So I'm going to delete that dotted line, which was forming last time we spoke. And I'm going to move that up to that level there. And that's our new support level in this little range here. So just to be more confident about going long, we want to see it break above this resistance and trend further to the upside above that area. Now, so it's already broken the descending trend line, which is a good positive sign. We want to see it break higher and break above the resistance on the red line there. You'll notice also on this range, the 23%, it bounced off that twice. So that's a potential double bottom. And we should see it go almost double that distance higher still. So on the hourly chart, again on this smaller range here, between that low and that high, it's actually come and bounced off the 50% level and bounced up, and that's an ideal spot for a reversal. And it's done that again twice, and then that's the 38% level on the wider time frame. But again, just be careful, it's below the moving average of the CCI, and that's a weakening sign. So if it breaks much further than the above that resistance, we should see this break also above its moving average, which will be a positive, in which case you can potentially start trading long. Just be mindful, we did actually draw back here a couple of a divergence, a bearish divergence on the CCI and a bullish divergence on the price chart. And as you can see there, from there it did drop, and you would have traded that possibly going short in that little area there, and you probably would have done it when if you see that there, when it broke below the moving average of the CCI. That would have been an ideal place to go short based on that divergence if you trade divergence. So overall, if you're not in a trade, or if you're not trading this at the moment, just probably hang off until we get a confirmation breaking above the moving average there. And that'll also break above this resistance area to confirm that long positioning. So at the moment, it's looking cautiously long, but again, wait for these two areas to break to the upside for any further upside and long positions. To understand how to properly trade using the average down approach, we don't use stop losses. Reference the links in the description below. Subscribe and like, and thanks, and see you in the next video.